clarity, regulatory certainty. The U.S. is certainly behind other countries, but even some of the leading countries in this space, understanding how the businesses you operate in are going to be regulated by governments is critical to make investment as an entrepreneur, to start new companies. As a U.S. entrepreneur, when people ask me, they're thinking about starting a crypto company, I say don't incorporate in the United States because that's where it's somewhere between hostile and uncertain. And there's much better clarity in Japan and Singapore, here in Switzerland, to invest. And I think globally having more clarity, more certainty will help this innovation thrive, and it'll help remittances because of that.
Yeah, I feel like from at least the kind of crypto and blockchain industry, this promise of more efficient, more inclusive finance and delivery has been elusive. It's been something that this industry has been parroting and talking about for almost 10 years. And so what I'd like to see in a year is that we've really solved some of the fundamental problems with that. And there's, let's say 100 million people in the world who are using digital wallets that can be transacting on blockchains, that are doing it at the speed of the internet with extremely low cost. And that's working for people, that it's working for people on the ground, and that there's pieces that are needed. Regulatory clarity is needed for that. There's on and off ramps. It needs to be connected into cash economies, other things. So there are pieces that are needed, but that's my hope. My hope is that a year from now we can all sort of come to the table with more and more human examples of this really working for people.
Welcome to the Cryptoteacher. And guys, I come back with that video just to make you think. And we have Brad, Garlinghouse, and Jeremy on center stage at Davos. And Jeremy and Brad were playing the Hegelian dialectic. And we know Brad is a smooth operator. And he snuck in that Ben Bernanke was at a Ripple meeting. And we know he was a part of the last financial crisis. And that sparked Bitcoin, but we know the central banks took over Bitcoin. And we have Jeremy speaking of stable coins being able to move money at zero cost. And that's how they're going to sell the sheep. How did Walmart put all the mom and pops out of business? By saving everybody a few pennies, and you look around and nothing else is around. And Walmart spikes the price, but now you have no competition. It's an old mob move, and it works every time. On a global stage, we're going to have billions of people put out of work. From the robots, algorithms, and drones, the fourth industrial revolution. Like Brad said, he's betting on the future. He really wanted to say, I'm betting on the fourth industrial revolution. And if you're starting a business, you don't want it here in America. You want it in the emerging markets. Because we know the emerging markets are about to rise. China, the dragon, is going to take the place of America to Babylon. And remember, the Cryptoteacher told you, because he knows. When it comes to the New World Order, it's all planned out. You have a wonderful day.
With everything you just said, and the point that jumps out at me the most is, in a moment of crisis, these are the kinds of money movements that are the most critical to a population that is most fragile. The WEF's motto is about improving the world, and I think it's almost a tragedy that the people who can least afford it are the ones paying the most. Looking at your data, we can say that the mobile wallet at 1.7% and celebrate that that's much, much, much better. But I would ask the question of, why isn't it 17 basis points? Money today is ones and zeros. You can send an email to anywhere in the world for effectively nothing. Why is it even 1.7%? And I think the good news is we can get there. There are hurdles, and more so than anything else, I think the hurdles is the incumbency of existing players, and I mean that as relates to corporates as well as governments, who sometimes don't always have a shared incentive of what's in the best interest of those populations that might be most fragile and in most need of those, in a moment of crisis, funds from loved ones, home, what have you.
Space about 9 years ago, and the core belief was that, we as Brad really referenced, we've grown up with a world now where we can basically transmit data and information and communications instantly to any person anywhere at no cost. and we take that for granted. And so when there's people we need to engage with, that's freely available. And there's an internet architecture that made that possible. And so I think what got us excited about digital currency as a way to address this issue is the potential that we could get to a place where you could have a dollar that could be transacted and transmitted at internet scale to any person anywhere without permission on a peer-to-peer basis at effectively zero cost. And I think we're actually getting really close to that. There are a lot of these last mile issues. There are issues of whether people are mobile enabled or do they have to operate in a cash economy. So there's like these bridging of the kind of physical currency world and the digital currency world. That's a real barrier as well. But I think fundamentally we are moving into a world where the concept of a cross-border payment will be as crazy sounding as the concept of a cross-border email. We don't think about cross-border emails. We don't think about having a cross-border web browsing session. It is absurd to think about that. And I believe we're on the cusp of that with money. And I think when it comes to remittances, I believe the concept of a remittance will also disappear because we don't think about a long-distance telephone call anymore. We have WhatsApp or whatever we have, and we just make a call, and it works peer-to-peer in a secure, private way with anyone in the world. Money will be the same. So that's what we're working towards. And then I think in terms of the theme of this discussion, I mean, the whole goal here is how can you raise global economic prosperity? How can you help people connect into economic activity more easily, more safely, more securely, and do that without the toll takers who are extracting a rent from them, as Brad said, from the members of society that most need every last penny, so to speak.
About where the future is going, I actually think, and partly building on something Jeremy said, I think one of the hardest parts of actually solving this, and Jeremy, I think very correctly said the word without permission. And I think one of the things we lose sight of is I think there's a lot of businesses that have very compelling solutions. You're hearing about some of them here, but governments matter. And we live in a world of government controlled. The financial systems in G20 markets are regulated in that. I'm not even saying that's necessarily a bad thing or good thing. It just is. I don't think that's going to change in my lifetime. And one of the challenges, of course, here are core financial regulations like KYC, know your customer. And a regulator hears the expression without permission, they take a deep breath and they're like, wait a minute, no. If that's without permission, I need to know and make sure that that's not money laundering. I need to make sure that's not human trafficking. I need to make sure that's not drug X, Y, and Z. I need to make sure that's not terrorist financing. And I think, just regulatory frameworks are obviously there for a reason and to protect various aspects of society. But in this context, it actually is it's a point of friction that we should just be aware of. And I think if we try to proceed in a without permission, I worry that that we take one step forward, two steps back.
One of the important things to recognize is, cash is a really great product, right? People like cash. It's private. It's secure. It's a bearer instrument. It provides final settlement between you and a counterparty. And there's a reason that where cash is king, so to speak. And I think there's so much energy in the world aimed at taking away the features that make cash so powerful. There's a reason why people in countries around the world actually would prefer cash versus mobile money, because it gives them more self-sovereignty. It gives them more economic freedom. And so a lot of the policy and regulatory issues that limit the power of moving money have to do with stripping people of their economic freedoms. And so I think we've grown into a world on the internet where governments, for example, were terrified of the idea that people could use encrypted messaging, that it would strip away their ability to do law enforcement. But now we take it for granted. Everyone can have encrypted messaging. They can have private communication, and there are companies that defend that as a fundamental human right, and it matters to people in for good and for bad. And I think we have to think about solving for these problems by building models that actually provide for forms of digital cash that have the features that make cash attractive to people. And I think on a global scale, if I can go to a corner store and buy a SIM card and put it in a phone, I can participate in the global internet and have communications and have an identity to communicate. That's possible for pretty much anyone, anywhere. Why can't I take that mobile identity and download a peer-to-peer digital currency wallet? There are hundreds of these today. And now be able to receive something like USDC. And I can receive that at no cost. And I can have a peer-to-peer transaction that is a digital cash transaction and do that and do that globally and interoperably. And so I think that there are models that can make this work. I think policymakers and regulators have to adapt to that, as opposed to trying to get everyone to adapt to their constraints. And you can take a risk-based approach here. Just like a mobile SIM is of certain use, you can take a risk-based approach. And if you start to want to interact with an identity that is doing a larger amount, then you might have other identity requirements that emerge. But we have to preserve digital cash. That has to work on the open internet. It has to work interoperably with anyone, anywhere. That's how we're going to solve this problem. And I think we're really close. I mean, USDC itself we've seen over $3.5 trillion of transactions directly on the internet between counterparties. And so if we can, improve it with more scalable blockchain technologies like, Brad's company provides, and we can make this extremely low cost to move, and then enable individuals with digital wallets that can interact, and you can scale into the risk, right, is the way I like to think of it. But at a base layer, if you want to solve for this problem, governments have to accept that people want digital cash. That is a product that they want. And from a remittance perspective, that's critical. If you want to educate someone and say, hey, you should do this digitally, they want to know, is this as good as cash? Can someone turn it off? Can they turn it off? Is it as good as what I get when I get cash? And I think we need to answer that question definitively as a society if we want to solve this remittance problem.
Full stop. The thing to think about, I think, is if you approach the regulators with you need to adapt to us, I mean, that is dead on arrival. Like in my experience, and globally, and frankly, even here in Davos, meeting with financial regulators in all kinds of countries, I think we have to acknowledge. Ben Bernanke, the former head of the U.S. Fed, came to one of Ripple's customer events, and one of the things he said is, countries will not give up their ability to control monetary supply. They will roll tanks into the streets first because it's giving up sovereignty. Now, we can debate whether or not some countries at the longer tail ever had control of their money supply. But the G20, I think I agree with Jeremy that cash is anonymous and private and all those things. But if you ever walk into the bank and ask to withdraw $20,000 of cash, they're going to ask you a lot of questions, at least in the United States and other G20 markets. And so the way I think about it is in terms of solving
a risk-based approach, right? It's sort of saying if you're going to have these bearer instruments of that scale, we need to know a lot more about you.
Yeah.
I think there is a role that we can all play to make sure that we have regulations with more.
Digital currencies are somehow more can circumvent. As Jeremy's described, digital currencies actually in many ways are more traceable and more trackable and more visible. And so in some ways, I think governments should actually like it better.
Yeah, I can try and answer two questions at once. So USDC is a dollar digital currency. It is regulated under banking supervision laws in the U.S. It's issued by Circle, which is a regulated financial institution, and it's fully reserved by in government bonds, U.S. government treasuries, and cash. And so it is a reliable, durable dollar digital currency that works on the public internet. And so it's the sort of fastest growing trusted dollar digital currency in the world. And so from the perspective of choosing something, it's a pretty good choice, I think. But it's also one of the only digital currencies that operates in a regulated context and was designed from the start to work that way. It's different than something like Bitcoin, which is not itself regulated, but it has the problem of price volatility, whereas USDC is just always a dollar. And then just to the other question, we're seeing a lot of adoption in emerging markets. We're seeing demand for these digital currency dollars, significant demand out of Latin America, Africa, Asia, other markets, because people want digital currency dollars, and they want to be able to hold them to store value. They want to be able to transact them because they can do that easily on the internet, and they're also able to take advantage of things like decentralized finance, which provides opportunities for borrowing and lending and other forms of financial services without being dependent on banks, by just conducting those transactions through open software on the internet. So we're definitely seeing that demand as well.
Thanks, Jeremy. Brad?
I agree with USDC is a great solution for one of the things you were talking about. And the Argentina question I thought was super interesting because I often will say I usually call crypto digital assets, or I don't usually say cryptocurrency, because for all intents and purposes, I think mostly it's not a currency in the kind of consumer definition of that, except for kind of some of the tail risk around in Argentina or Zimbabwe, where those governments have lost control of their currency multiple times. And if you're a wealthy person living in one of the, or even a middle of the road person living in one of those countries, I'd rather not hold the currency as opposed to a digital asset and maybe a USDC or a more traditionally defined digital asset. I completely agree with the question around is the automation, Regtech. If I were in the venture capital business, and to some degree Ripple's invested in about 50 companies, so to some degree we are, I think Regtech is an underappreciated opportunity. The one risk, however, on that is that came to light as we work with a lot of banks around the world, is a bank saying to me they won't accept another bank's KYC token, if you will. Just because you were KYC'd by one bank, you're going to get KYC'd by the bank you're sending to, because the risk of a bad KYC to the accepting bank is so high that they won't trust the other bank. That's one where it feels like, okay, maybe some of our regulatory frameworks could change, but I think you're right that Regtech's a huge investment opportunity.
Yeah, I mean, absolutely. We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort, and China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, So therefore, we can start the re-education now. Because as we see, the fourth industrial revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.